I don't know about you, but a lot of people feel that they missed out on SIA shares when it crashed during COVID. Right now, SIA shares has recovered back already. And in the last 3 years, if you don't know, SIA has been the number 2 performer in the STI index, outperforming even banks. Today, I'll share with you some latest updates for its 4th quarter report, and I'll give you a complete breakdown as to why, personally, I'm not the biggest fan of investing in SIA right now. Hi guys, welcome back. Let's see the nice looking headlines first. How about that? SIA profits have soared 24% year on year to $2.7 billion. And on top of that headline, you'd see the SIA is paying their staff almost 8 months worth of bonuses. Wow, 8 months. To be exact, 7.94 months. That's still a lot of money already. Because for a pilot who earns 20,000, that could be 160,000 in terms of bonus. This is after last year's very generous 6.65 months bonus already. So airline crew, congratulations. I think you are making back your monies from the pandemic. But today, we're discussing about SIA shares, correct? So let me pull out firstly a bullish report to show you two sides of a coin. This over here is by Lim & Tan. SIA has recorded a record $19 billion of revenue. They will be paying 48 cents of dividends per share. And on 15 May 2024, the company has announced its intention to redeem all the remaining mandatory convertible bonds that were issued in June 2021. All in all, they feel that SIA is an accumulate right now because of its high dividend yield and also its 9 to 10 times price earning not being demanding, while its balance sheet is very robust. Really sounds quite cheap, correct? 9 to 10 times price earnings ratio. Actually, with this latest result, price earnings ratio has actually dropped to 7.5 times. Let me pull up for you to see. SIA right now, price earnings ratio 7.5 times because earnings has swelled. But this is actually not unique to SIA itself. I've prepared for you to see Cathay Pacific right now trading at 6.9 times price earnings and Delta Airlines trading at 6.84 times price to earnings. So all in all, the entire airline sector appears to be very cheap because earnings are at an all-time high. If you haven't had time to look at the latest reports, let me screenshot for you the most important few key points. And before I get there, help me smash the like button because it's taken our team hours to prepare this presentation for you. Especially if you're an SIA shareholder thinking of buying or selling, hopefully this gives you further insights. This over here is the group revenue for SIA. You'll see that quarter on quarter, it has actually dipped slightly, correct? From 3rd quarter to 4th quarter. However, when we make comparisons, we need to compare year on year because 3rd quarter is the December period. That is a seasonal high in terms of global travel. So in terms of year-to-year comparison, this is still a significant increment over the previous year. And the main contributor is actually the passenger flown revenue. The total gain from this sector is 9.7%. I guess with China now reopening even more, SIA stands to benefit because SIA actually derives most of its revenue from East Asia, which includes China and Singapore. This over here is a quick breakdown to show you where the revenue source actually is coming from. And you're curious about this nice looking interface and analysis? It's actually from Tiger Brokers. If you're looking to trade SIA shares or any other listed shares in Singapore, US and Hong Kong, Tiger Brokers is a low-cost trading platform that you should use. Right now, I have a special deal for you. They have a max sign-up reward, but I'll touch on the easy one to claim first. If you're new to Tiger Brokers, you'll get an account opening reward of $6 and a special offer using my links below of $30 of fractional shares of Tesla when you deposit a minimum of $1,500. Speaking about earning free Tesla fractional shares, register for free and instantly get a Tiger Boss debit card. You would enjoy competitive FX rates and earn 1% Tesla fractional shares with every transaction. Now, if you have deposited and completed 3 trades, you also receive one lucky draw worth $20 to $600 that could be on Amazon, Apple, Tesla, or Nvidia. If you're okay to deposit $5,000 or more, you get 3 lucky draws worth $60 to $1,800. And if you're looking to deposit $10,000 or more, you get a max sign-up reward of $120 to $3,600. What if you want to trade more? Tiger Brokers also has this new Cash Boost account. With a simplified process, you can open an account in just 3 minutes and start trading without needing to deposit funds. And trade without depositing funds for the full position, with up to 90 days of commission-free contra trading. Look for my links below, and thank you again for supporting the channel. Now back to the point of SIA's revenues going up. The next part is also equally, if not more important, and that is on the drop in profits. This chart over here is group net profit, and you see it peaking out in first quarter 2023-2024. And you see it peaking out about a year ago in first quarter. That was when it recorded the highest quarterly net profit, and it has been a steady decline ever since. What could be the contributing reasons? This over here shows possibly some clues. Firstly, lower cargo revenue. The cargo yield has been pretty bad, and I guess it also explains why SATS, for example, isn't doing that well. Second biggest is increase in staff costs. Now I guess SIA is rehiring a lot of people, and they are restating back a lot of pay scale versus 2022. So all this cost definitely adds up and affects the net profit, which leads me to raise concerns also about their margin. Over here, you can actually see a 10-year comparison between SIA's revenue, gross profit margins, and net profit margins. I've done the homework to show you some key points. This over here is last year's result, not the latest one, which looks even more extreme. This period's revenue is at all-time high. However, this period's cost of goods also appears to be at all-time low. You will see that cost of goods sold is about 48% now. It's about 48%. But in previous high years, it could be as high as 58% in 2018 and 67% in 2015. This lower cost of goods sold, I'm not too sure whether it's sustainable or not. My guess is it isn't, and therefore my hunch is that the net profit margin might shrink over time. Currently, the net profit margin is 12% plus. In previous years, 2018, it was only at 8.2%, and in 2015, only at 2.3%. Take note again, these two periods were also not recession periods, which typically can affect aviation industry, and that's why I suspect that net profit margins will shrink in the coming years ahead. I went to do some investigative search, and I dug up a financial 2026 one to compare against a 2023 one. We would see that there are certain costs that are even lower than in previous years, and it looks very weird. The first one, aircraft maintenance cost, is lower than before. This has to pick up over time, correct? Then up next, landing, parking, and overflying charges. This is significantly less than in previous years. Maybe they are getting some discounts over in that front. Not too sure about it. Then, air flight meals is lower than in previous years also. That part, I guess you know what I'm hinting. But the main cost for SIA and any other airline is definitely fuel costs. Currently, the fuel cost stands at 31%. This is a slight inch up from previous quarter already. And when I look 1 year ago, this fuel cost was even higher at 34.5% because oil price was even higher back then. SIA now doesn't hedge its fuel too much, and my worry is that this cost could increase if oil price increase in the coming years ahead. The airline is typically not able to pass on all this extra cost to consumer, because for us, we compare a lot of times in terms of the price, correct? Even for business travels, sometimes there can be some cost sensitiveness. Beyond that, I have something further to share with you that I think is pretty important also. SIA actually had a first mover advantage. They had money to keep afloat, to retain majority of its staff, and also to keep its aircraft. And this is a quick snapshot of its history, which I've covered a lot on this channel, on how it actually raised money, and right now at this phase, returning back some money. Back in 2020, it raised $8.8 billion with rights and MCB issue, which is the mandatory convertible bond. Then in 2021, they raised further $6.2 billion of mandatory convertible bonds. Both of these events caused a dip in terms of share price because it could result in dilution. Then SIA saw positive sentiment when it actually announced its first redemption of the 2020 MCB. This report shows SIA shares took off after the MCB redemption announcement. At that period of time, SIA also declared its first dividend post-pandemic, which brought a lot of feel-good factor and market rallied subsequently in a few quarters ahead. Then in May 2023, SIA actually announced further that they'll redeem half of the 2021 MCB. In November 23, they've announced to redeem a quarter of that 2021 MCB, and most recently, they'll be redeeming back the remaining one quarter, fully closing the books on this potential dilution. On SIA's part, this has been well played, and also because Temasek supported it well, and together with government support to retain staff by redesignating them and getting their aircrafts ready, SIA actually had a first mover advantage. It is admitted by CEO, SIA was significantly ahead of Asian-based carriers in terms of passenger capacity recovery. So the headline reads that SIA is aiming to maintain this first mover advantage. This was back in November 23, but in latest results, you would see that the passenger yield has declined 6% already, and this can be attributed to intensifying competition as airlines progressively restore capacity. If this trend continues and more competition comes about, it is expected that SIA might need to do more marketing, might need to make their prices more competitive, etc., which may eat into the net profits. Hopefully, I've raised certain valuable points. As you can hear from the entire discussion, personally, I prefer to invest elsewhere. But let me know in the comment section whether you agree or not. And in any case, do check out Tiger Brokers, which has this special promotion for free Tesla shares if you are a new sign up. And thank you for watching right to the very end. With this, I'd like to introduce you to some of my previous videos. The first one being 3 REITs that you can buy now. Follow on either of these tutorials and I'll sign off from here. Take care as always. Goodbye.